Let's talk about this. And this really tells a story. So this is a 10-year note we pulled up about, maybe 45 minutes ago. Tell us about this and what's the story behind this?
Well, the story behind this is what I've been telling folks for quite, the last several weeks and couple months. All the conversations I've been having with current borrowers and people who are looking to, get a loan or looking to maybe get into the arena to buy a home. All this anticipation about the Fed and expecting rates to go down after the Fed announcement. Well, this chart tells the story. What we kept trying to explain to people is the way this generally works is that as these Fed meetings approach, and if the probabilities are, if in the Fed futures market, the market has decided or convinced themselves that there's a strong likelihood the Fed's going to take action to lower the Fed funds rate, what happens when that occurs is the market prices that in before the Fed announcement. So that's what we saw in basically mid-August, right up until the Fed meeting. That was the period when we saw some very significant improvement in bond yields and therefore mortgages. The day before the Fed announcement, this 10-year bond yield wasn't 3.8, it was 3.6. That if you were someone who was timing the market, either to you maybe just opened a purchase escrow and you convinced yourself you needed to wait for the Fed, you should have locked your rate the day before the Fed meeting started. Refi borrower, I've got refi inquiries I've been talking to for literally weeks or even a few months. No, I want to wait until the Fed meeting. And I've been urging them, be careful. And I reached out to some of them that last week before the Fed meeting when we were getting down to 365, 362, 360. Folks, look at this. You need to take advantage of that. And then, of course, if I was wrong and the Fed reduction in the Fed funds rate did cause the mortgage yields, the bond yields to drop even further, well, if they drop enough, we can renegotiate the rate lock, but at least you protected your upside. Well, instead, these folks who were in escrow or about to start a refi who didn't want to do a rate lock and wanted to wait for the Fed, now they're disappointed. And so when, at least at this point, as we can see, if they decide to lock, they're going to get a worse deal than what they could have had if they did it right before the Fed meeting. So again, I can't stress enough, don't focus on the Fed when you're a mortgage borrower or want to be a mortgage borrower. Focus on the bond market. And of course, the bond market is all about the data points, the labor market statistics, the GDP, the CPI, the PPI, the inflation indices. That's what you need to focus on to try to track where mortgage rates are going, where the bond yields are going, because that really tells the tale as to what your opportunities are going to be.